now for the closing countdown. Let's trade the close with Shawn Cruz, trader strategy manager at TD Ameritrade. Shawn, little changed on the major averages. What are you watching in the final minutes of trading here for the session, for the month of August, and how everything is going to shake out?
Well, I think it's interesting that we are finishing the session this week kind of in a little bit of a continuation of that defensive trade that you were just talking about. And I think that really goes to the psychology of investors, and that is there's just a lot of uncertainty. And so this morning when we got that rally higher towards the top end of that range around 29.40, that's been upside resistance moving forward. So I actually thought it was interesting that you still saw the VIX remaining elevated, whereas previously when we got rallies like that, the VIX was pulling back closer to 15. So I think they were cautiously optimistic going into the final trading day of the week, but it looks like they've decided to go a little bit more into a risk-off stance into the defensive sectors, really to close out the week.
Shawn, what do you make of some of the retail earnings we've seen?
I think what we saw from the retail earnings actually confirms to me what I think is showing up in some of the survey data, and that is the consumer, which really was the star for the GDP report yesterday, is starting to get a little bit more cautious. And we've seen that, one, in a lot of the sentiment data that's come out. If you look at the expectations components, those have been falling off pretty drastically. And I think that's something to say that the consumers are getting a little bit more shaky in terms of their willingness to spend here in the future. And if you look at retail earnings, some of the more high-end types of stores, think of like Tiffany's or Nordstrom, didn't do very well. Where we've been seeing a lot of the performance on the retail side is a little bit more of the bargain shopper type of companies, and that's why you see Dollar General, Costco, Walmart. They've actually performed well in terms of earnings reports and then also stock performance after. So I think you're seeing that caution from the consumer play out in the survey data and also from a lot of the companies.
So, I mean, we are looking to have a very strong week in the markets here, up 2.7% on the S&P. Shawn, how much do you think is just month-end positioning, rebalancing from the likes of pension funds on just the sharp divergence in terms of performance for August from stocks to bonds?
I think when you get what we have, I think, coming up in September, and that is going to be a very headline-driven trade around news coming out on the U.S. and China trade discussions, because we don't really have the Fed until the end of the month. We don't have too much on the earnings front, so I think headlines are really what's going to drive that volatility. So if you've seen some of the divergence in the sectors we've seen over this month, it can throw portfolios a little bit out of whack. So I think it makes sense that you want to rebalance your portfolio and go into what has the potential to be a volatile September, completely in balance in terms of where you want to be.
Mark, as you look into September, are there any key strategic trades you're placing on a asset allocation level?
Yeah, so from an asset allocation standpoint, bonds don't look very attractive. I mean, institutions are going to start to roll out their capital market expectations, which show us what bond performance should look like over the course of the next 10 plus years pretty soon. And I can't expect that they're going to be that great, right? Maybe 2% per year. So lightening up on bonds and really looking to add alternative asset classes, whether it be gold or Bitcoin or infrastructure, just some non-correlated alternatives that aren't stocks and bonds.
You know, the data really picks up, Shawn, next week. I mean, Chinese manufacturing and non-manufacturing, which you'd think would be key in this environment, are out on Monday. Friday is the U.S. jobs report. How sensitive do you think stocks and bonds are going to be in this environment to economic data where we're all focused on the presidential tweet storms, trade news between the U.S. and China, and of course the Fed?
Well, I think investors would like to see a little bit more strength, I think, out of some of these China indicators, especially on the manufacturing front. But I do think next Friday's employment situation report will be important. But one thing to keep in mind is we get the employment situation report, and then we get one last speech from Powell a couple hours after that report comes out, and then the Fed goes silent until their meeting. So I think Powell's speech post that employment situation report next Friday will be important, but I would look at the wage growth component of that report specifically, because I think that might give you a read-through on the health of the consumer and also a little bit of a read-through on inflation. I think those are going to be two very important things you pull out of that report from what we get in the wage growth number. If you don't get solid wage growth, then you start to ask yourself, is this the first shoe to drop in that softening consumer?